on the international front, trading in the U.S. shares was briefly suspended yesterday after sharp falls led to an automatic halt in the selling and buying of stocks. Once trading resumed, 3 major U.S. stock indexes went down over 6%. Meanwhile, South Africa's rand also plunged by almost 8% against the dollar, touching its weakest level on a closing basis since January 1980, as investors fled riskier assets. This, coupled with Brent crude tumbling more than 30% on Monday and said to be the largest drop in one day since the start of the Gulf War in 1991. Well, my colleague Philip Namfuri joins me in the studio to take a look at the extent to which this coronavirus is affecting the economy and what government should be doing to mitigate the impact on the economy. Well, somewhere along the line, we'll also bring in the head of Data Bank Research for some further analysis of the development on the stock market. Philip, you're welcome.
No, thank you very much.
So is it time for government to dip its hands into the stabilization fund, because that is what it was set up for?
Okay, so we're looking at our economy, and then I suppose by your submissions, we're looking at the Ghanaian economy and the impact on the drop in the global oil prices. And thinking about it, I think we pegged our listen around $62 from the report that you played. A lot is riding on the use of oil revenues through the annual budget funding amount, that's the ABFA, to sustain our economic growth and development. And if I'm sure, I don't want to go ahead of myself and say this is what is going to happen immediately. I'm sure in the coming days, weeks, we should see that's if the oil price is still below what it is. Other markets, I'm sure you're well aware, given your exposure to the oil industry in terms of your experiences, you realize that some can pump at lower prices and still turn a profit. We haven't really reached that stage where we can pump or we can produce output per barrel at a lower price as compared to other economies, Saudi Arabia, Russia, etc. So I think if all things being equal, this happens for a longer period of time, then we have to look at what we have accrued in the stabilization fund over time.
Longer period of time, like what? I mean, 3 months?
It will depend on the outcome of Saudi Arabia and Russia's position with regards to OPEC. It will depend on the impact also on the coronavirus in terms of oil demand. We are hearing today that there are fewer cases in Wuhan as we saw in previous days. Oil, China being the biggest demander, if I can say so, of oil and oil products. Would that be good news in terms of demand? But we should also know that at the same time, other countries are also experiencing the brunt of it. Just before I came on here, I was looking at Bloomberg has this table where they give us numbers of countries that have been affected, and those that are still those that are still implementing travel bans and stuff like that. So you see that the oil story comes from different prongs. We have the local demand, we have airlines also not flying again, so they're not going to be demanding. So you see that it's a mix,
kind of complex,
a multiplicity of issues. And sometimes it's very hard to sit down here and accurately say that at this time this is what's going to happen and stuff like that. So that's just one part of it. There are different strands.
No, as a country, we may be lucky at this time because we have not witnessed, any outbreak.
By God's grace.
For now, by God's grace, so to speak.
Yeah.
Now, do you think, or how do you think the government must position itself now to offset a potential outbreak?
I think for the health side, I'm not really a health expert, so I would defer to the health experts. But on the business side of things, I would say, as an economy that's mainly driven by commodity exports will be hit or are already being hit. There's some reprieve when it comes to the gold side because of investors turning to safer haven assets. But you can see that even though there was a plunge in the stock market yesterday, there's been a rebound again this morning. Investor sentiment changes rapidly. And we should just hope that this virus is brought under control, particularly for us as an economy. And at this time where we have so many ambitions in terms of implementation of policies, programs, etc., I think we need every little penny to flow into our kitchen.
So what lessons should we learn as a primary commodity producer? Should we rely on these commodities because they have many times become volatile?
I think we know the answers, but I think it's the execution and implementation that we struggle with over time. But if we put in the right measures, I think there will come a time where we'll stop telling this commodity dependence story and all that. So I think It's just a matter of implementing and executing right strategies to ensure that we move in from primary production to manufacturing.
Okay.
We're already very dominated or service-based, if I can call it that. So it's a matter of moving to the manufacturing and benefiting from that more than the primary side.
Now let's bring in at this point the head of research at Data Bank, Aboagye-Wiafe, to also make an input into the international stock market and how the local bourse is responding to the coronavirus scare. Good afternoon, Alex. Welcome to the marketplace.
Right. Good afternoon, Emmanuel.
All right. So, like you heard earlier, the U.S. stock market recorded some downturns yesterday. Actually, it's actually halted selling of selling of stocks. What do you think, as a stock market expert, things like this happening, how do they reflect in our local market? Why should we be worried about this?
Well, first of all, I think the coronavirus has become a global issue. It's not only an issue that affects the U.S. or the China in the stock market, especially in Asia, London, and America. As investors focus. Hello.
Hello, Alex.
Yeah, it is, Emmanuel, but I can hear my own voice.
All right, you go ahead. We can hear you now.
Okay. So it has become a global issue, and now the market attention is actually on the coronavirus rather than positive data. For instance, last saw positive job numbers coming from the EU, and typically see these factors being reflected in stock prices, and stock market going up. But at this time, it went down. Yeah, so that shows that, I mean, the market is mostly focused on the coronavirus rather than positive economic data that's coming out.
All right, so on our local bears here, we have some equities, international commodities or international equities also here. Now, with these downturn on the international market, are you witnessing some kind of, some effects on the local markets for which we should be worried?
Yes, sure. I mean, the market has seen so far this year, and the emergence of the coronavirus has also worsened matters. Now, what we have observed here is that most investors are due to travel to Ghana for their due diligence process, the investment process. Most of them tend to call off their visits, and that is positive the market, because as you are aware, the market is mostly dominated by these foreign investors. So once they are fully paid, you should expect that demand of Ghanaian stock in particular will be low, and that possibly be lower affect the stock price.
So if I got you right, it means that the local bears is not actually being felt, heavily like what is happening on the international front. Unfortunately, we lost Aboagye-Wiafe. He's the head of Data Bank Research. Back to studio. Final words before we go on break.
Alex mentioned something that I found particularly interesting, and we've seen it happen on our local bears for some time. There's this theory in finance called the efficient market theory, or efficient market hypothesis. All it says is that investors react to information available in the market. You've seen that sometimes in Ghana, anytime there's news surrounding a particular company, you will expect a sell-off in that equity. It doesn't really happen. Okay. So some have argued that our market is not really deep enough and efficient enough. Efficient is the word in terms of selling off or buying anytime there's information regarding the company. Okay. So that's just by the way.
Doesn't it thrive on speculations as it is
as it is in other places where once there's information, there's a quick move in the market and then there's stuff like that. We don't see that much in Ghana. Okay. But as time goes on, I expect our market to develop. The GSE, SEC putting things in place to ensure that our market becomes more robust. Okay. We should see that going. But with the coronavirus, like I said, we're not health experts. All we can do is to wait and see how best governments, now the IMF said they'll put aside some funds, World Bank, central banks, finance ministries, everybody's coming together to ensure that there's some liquidity, some support in the system if this thing goes out of hand. So I think we should wait and see how things go. But that notwithstanding, the ripple effects are still happening, and
all right,
we're doing our best to contain them.
Thank you very much, Philip Namfuri. Still live on the marketplace.